I'm here with Hamza Abu-Musa, who's the founder of SharedEq. That's an investing and personal finance platform for Sharia-compliant users. So Hamza, why is Islamic finance particularly disruptive?
Thanks, Tom. So just to give a bit of an overview around Islamic finance as well. So there's three core principles that Sharia-compliant finance revolves around. So number one is the prohibition of interest. So that's probably the most common one that everybody's aware of. So the Islamic model, it's much more focused on an equity mode of financing, which is about sharing the rewards between partners, but also sharing the risk as well. So there's a strong focus on equity finance. And then secondly, it's about where the investments are made. So the industries and the firms that they're made in and where the capital is deployed. The industries and firms need to be Sharia compliant and they need to be considered ethical. Okay, so that immediately excludes certain industries such as pornographic industry, gambling, payday lenders, financial services, but also that actually extends to certain firms that may be over leveraged. Okay, so that's the second core principle around where the investments are made and how ethical those industries are. And point number three, it's about the transparency of the agreement as well. So it's essential that all parties involved in an agreement, in a transaction, understand what the terms are and everybody's clear and there's no sort of doubt or ambiguity in that contract. So they're the three core principles: prohibition of interest, and that includes giving it, taking it, even witnessing it as well. Secondly is where you're investing that wealth and the industries. And point number three is about transparency. So already you can, if you're familiar with ethical finance or ethical investments, there's an overlap there with ethical investments and finance. And so in terms of how disruptive is it, I'd probably say disruptive is probably too strong a word.
The term disruptive is obviously thrown around quite a lot in the fintech space, and sometimes there's not necessarily the theory of change behind it when it's used in the media, which justifies saying that a particular kind of finance is actually breaking up an established value chain, introducing a new kind of value proposition. I was interested in what you were saying about the ethical finance side of things, but let's talk about the transparency. Are there ways of being transparent around investments in Islamic finance that could teach traditional finance something?
It's fairly simple. So, in terms of transparency, the contracts just need to be as straightforward and simple as possible. Yeah. So it's just about, the key point is simplicity and just making sure that everybody's informed, all parties are informed and aware of the terms and what's happening. So there's quite strict conditions around the execution of sales and not having future sales that are dependent on certain ambiguous events. So it's important to have that certainty to eliminate any sort of doubt.
So a couple of years ago, policymakers were very, very, pro-Islamic finance. There was a conversation about making London the world centre for Islamic finance. Are you still feeling the love from policymakers?
I suppose in my case, it's probably been a little bit different. I've not really felt any love so far, but that doesn't mean it doesn't exist. That doesn't mean it's not there. Rather, I think there's a perception that most of that support has been on the institutional side and bringing that investment from abroad into the UK. So even if you look at some of the developments on behalf of the government, there's the Sukuk that was issued, which is sort of a Sharia-compliant bond, and a lot of that was about attracting investment and making the UK an attractive place for foreign investment. I think it's less about the retail side, which is what we're involved with. It's about the sort of grassroots level. I think there's less of a focus on that side, on the domestic UK market and the Islamic finance options that we've got here. So specifically within the UK, we're talking about just the Muslim population here in the UK. It's 4.5%, which equates to about 3 million altogether. But also I think there's a point here that it should really go beyond that, and it should really, Islamic finance should be about tapping into the ethical form of finance as well. So it shouldn't just be the Muslim market. I think it needs to expand beyond that. In terms of the actual industry, So globally, there's 2 trillion, big difference, $2 trillion worth of assets under management within Islamic finance, and that's projected to grow to 3.2 trillion in 2020, according to Thomson Reuters. So it's a growing industry, it's growing, and the UK is one of the sort of growth countries. It's considered one of the high growth countries when it comes to Islamic finance. But what's interesting is you've got the ethical finance industry as well, and that alone in Europe is worth $22 trillion. So yeah, there's quite a big difference there, and particularly there's this trend with millennials wanting to invest in more of a meaningful way.
Let's talk a little bit about the structure of the sector. Sometimes when you hear fintech people talking about fintech, it's as if the big banks don't exist. And for fintech to really prosper in a lot of areas, there will need to be cooperation between incumbent banks and challenger banks. So what was your view on that situation? The European economy is a banked economy. Where do fintechs kind of fit in?
In terms of the relationship with the banks and the impact, I think, just for the sake of simplicity, I think just segmenting fintech, because it's quite a big beast and there's different components to it. I think if you just segment it according to business to business and sort of business to consumer, so business to business being the innovations, things like the blockchain, which are about selling the technology and getting banks to improve their efficiency or for them to improve their performance. And then you've got sort of B2C, which is more about the fintech startups and innovations that are more about changing business models and providing users with what they want and what they need, or providing a better user experience. I think in terms of the former, I think it's fairly straightforward. Yes, there needs to be some, it requires the support of banks. There needs to be a relationship with the banks. There needs to be some collaboration. It's very difficult to do anything without your clients wanting what you're offering. So I think that's fairly straightforward. I think with the B2C, it's slightly more complex. I think it's possible to do it without the support of the banks. Is it easy? No. It's going to be incredibly difficult. The banks have got massive advantages. They've got resource, they're capitalized by billions of dollars, they're huge behemoth organizations. They've got the infrastructure in place, they've got experience of scaling, they've got presence in foreign markets, they've got customer trust that they've built over years that may have been slightly eroded, but they've got all of that in place. So it's very, very difficult to come along and upend that. And actually, even if you look at some of the startups that have done that in the past, there's, beyond PayPal, which is payments, there's not many sort of fintech startups that you can name that have actually completely disrupted or taken business away from the incumbent banks. It is possible.
So the Competition and Markets Authority recently released the findings of a 2-year report, which told us a lot of things that we already knew. So UK consumers don't change their banks. In order for banks to serve them better, they need a bit more competitive pressure. It called for an open API for banking, but it also called for prompts. Think about your financial arrangements, think about changing, think about what options are out there. You've previously talked about a bit of a confidence gap, maybe, when it comes to Sharia compliant users of finance and the sector. How has that emerged?
So I would say the customer trust gap, I believe, has emerged because a lot of users aren't fully convinced that it's really Sharia compliant. I think that's where a lot of the issues stem from. I think there's this general perception, and it's something that we've checked as well with some of the research that we've done with users, and I believe it came up to about 80% of people had some doubts around
80%.
But 80% had some level of doubt about how Sharia compliant the investments and financing currently are. So there is that slight issue around it. I believe that's emerged, those doubts have emerged because historically, over the past 15 years since the industry's really grown, it's replicated the debt-based financing model. So it's not really come about and revolutionized things, but rather it's taken existing products and modes of finance that we've got at the moment, so home purchase, for example, mortgages, and it's changed some of the technicalities in the detail and made them Sharia compliant. So I think there's this perception that Sharia compliant means following the letter of the law, just about following the letter of the law, and not necessarily the spirit behind it. When it comes to approving or authorizing something as Sharia compliant, generally there's a board of Sharia scholars, either that sit on each bank. There's a board of scholars who will need to authorize every type of investment. And over the past 15 years, there's been a number of corporate governance issues around that and conflict of interest, where you've got a small handful of Sharia scholars sitting on multiple boards and being paid by these companies as well. So there's a conflict of interest. Actually, they're being paid by the organization. So is that going to influence the way they make their decisions? So I think that it's improving now, and I think there's a organization based in Bahrain called AOFI who have standardized a lot of the Sharia standards, and that's sort of the guidebook of what makes something Sharia compliant. But up until that point, it was a bit of a mess, with a number of Sharia scholars sitting on a number of different boards and different products being authorized in different countries. So there's a bit of a mismatch as well. I think here in the UK, it's very different. It's always going to be a niche form of finance. And I think from here, it needs to be developed from the bottom up. And I think, particularly with some of the business models that are emerging through this FinTech wave, there's a number of them that can actually work very well. And one thing that I always say is, if Islamic finance was following the spirit of the law 15 years ago, we would have had equity crowdfunding 15 years ago.
Interesting.
And that is one of the most Sharia compliant ways to invest.
Okay, great. So, what are the challenges you see for people wanting to invest in a Sharia compliant way today?
I touched on it earlier, and I talked about a financial literacy problem. So in the UK, it's 67% financial literacy, and that's the overall population. And then you've got minorities who tend to be, the median is slightly further away from the general population average. And then you've got Sharia compliant users who have to go and learn all the basics of conventional investing, but then also have this additional layer of Sharia compliance as well. So often what ends up happening is it becomes too complex for a lot of people. So the challenge is about simplifying that whole learning curve, about making it as easy as possible so people can get that level of comfort and get that confidence in being able to deploy their wealth, their capital, and invest it themselves.
Fantastic.
Yeah.
Hamza, thank you very much for joining us.